Hello again, this is Alex with MasterChartsTrading.com and this is market recap for Friday, January 28th, 2022. As always, please don't forget to hit the like button, subscribe to this channel and share this video with others. Today is going to be a relatively short presentation. We have 4 topics to cover. We're going to cover stocks that are bouncing. I think they're bottoming possibly. High yield debt also seems to be bottoming, although before it hit 52-week lows, and dollar breaks to new highs, which is pressuring gold and gold miners as they approach 52-week lows again. So we'll see where that is taken us. Bitcoin also could bounce, but I think the trend is down. We will have, you can see, quite a bit to cover in the paid subscriptions. So if you are a paid subscriber, then stay tuned. If you're not, then consider signing up by going to MasterChartsTrading.com. Click on products and sign up for one of the services, especially the indicators. So the indicators are these lines in the chart, this green, blue, red, and yellow lines. And you can see on this daily chart of S&P 500, this is basically what I use. It's the easiest thing for me basically to use. So when the stock closes above this blue support resistance line, which it literally did today, S&P 500, you can see it happened right there on 24th of January and again today, on 28th of January of this year. So this is a good sign for me. So I would be actually buying right here with a stop at the yellow line. So the stop would be like that. So this is what I normally would do. We can actually look into the future a little bit. So we're going to look at using 6.0 indicators. But you can see that the lines are not lining up. So I don't use them, when they don't line up. When they do line up, then I use them. So right this instant, the lines don't line up. But I would be doing something like this. So this would be my setup to buy with the target of 2 average true ranges. You can see average true range 104, average true range ATR. We can do 2, so it's about 200 points. And the stop at the yellow line. Once the target is reached, so we're going to basically have this much distance. Once the target is reached, we'll take the stop and move it to entry. And this happens very often. This setup happens very often where we are able to get at least a target of 2 average true ranges. If that did not make sense, do send me a note at Master Charts Trading. I am actually very welcome, easy to deal with, and I can explain, personally what you're looking for. Sometimes people just need like a very simple idea of how to wrap their minds around trading. If you're in that situation, send me a message and we can work something out. So looking at this chart of S&P 500, we can look at weekly chart. So when we go to weekly chart, you can see the same indicators, but you can see the chart, the length is at 52, whereas here this indicators are length is at 250. So anything daily or lower or smaller, I use 250. Okay, and also if you're gonna do intraday trading, like for example, these are futures, they're continuous futures. So yes, indeed, you can do like 5-minute charts. See, 5-minute charts work really well. Like for example, I'll be buying right there. But if it was not a continuous instrument, like let's say QQQ or IWM, we do not do that. We do not use a intraday chart for not continuous instruments. So you can see that there's more data on the continuous instrument. Again, if that doesn't make sense, you can trade Forex on the continuous instruments also, like euro versus US dollar. But if it's not, like if it's junk debt, so for example, for junk debt, you can see there are gaps right there. There's a gap between the closing and the opening next day. So we do not want to do that. We do not want to trade intraday using not continuous instrument. We're okay doing it with, for example, futures. Okay, we can even do 15 seconds. There's 15 seconds. I mean, it's hard to trade in 15 seconds, but it's not impossible. So for example, that's a huge move right there. You would have entered right there and you would have bought, and notice this huge move in your favor. And that's a 15-second chart. So you can actually use, for example, futures on S&P 500 ETF SPY. So you can look at futures but trade the SPY SPY options. All right, again, if it doesn't make sense, let me know. Again, I can provide training. It's not that hard, but you just need to reach out to me. QQQ NASDAQ also, notice this bounce, and notice where the bounce happened. So this red line is now at caution, so caution phase, and notice what happened. It touched it several times, touched it today again, and rallied off of it. So this is telling me that there is support here, where the price is above red line, which is support. If you can see it's below the blue line, that means now it's resistance to it. So we're going to see if it bounces, if it stops, going down here, NASDAQ, and then it bounces, and let's see if it can, overcome this resistance at 366, 367 right now. Small caps by far took the brunt of the selling, so we were quite worried about them already. I was worried about them back here in December. They were really underperforming. Also, again, I wanted to point out this. So notice how far apart the lines were. I'm gonna show you what I mean here. So this is how much they were apart. They were like hugely apart. They were 600 points apart. I'm sorry, $60 apart right there, $62, and they were apart only $34 just recently. So this is what I would refer to as narrowing of a trading range, and during the narrowing of a trading range we can see a reversal or at least a change in trend occur, and this is exactly what happened right there. On 18th of January we can see a reversal, an entry of the security into a bear market. So IWM currently is in bear market, but as I keep pointing out, that actually makes very little sense, because you can see this is a monthly chart of IWM, and this is a correlation coefficient in the bottom here. So correlation between S&P and small caps is enormous. So what I'm trying to say is I'm having a hard time looking at small caps being in the bear market, yet NASDAQ and S&P 500 are still in the bull market. So I have a feeling that this is a bottom, at least intra, at least short term, a few weeks to a few months, and we will likely at least rise in the near term, possibly even continue rising and break out again above the blue support resistance line, currently at 223, and into a bull market. So I don't think we have turned around the entire market into a bear phase, because you can see that S&P and NASDAQ are quite, resilient here, especially NASDAQ. Look at this bottoming pattern, and S&P 500 also seems to have, in fact, it gave a signal today. This is a signal to buy. So we will play it by ear, as we say. Looking at junk debt, very similar picture to small caps. So small caps also, collapsed relatively, early in this downdraft, and here's junk debt again, also very large amplitude candlestick, which is bullish. It closed above where it opened, so it's green. But additionally, we can see a low, a tail, a shadow at the bottom here. So this is a indication of a bottom, or at least a support. So most likely what I'm seeing from overall market behavior together with junk debt, because junk debt I think is important again because of the correlation between junk debt and small caps. So we can look at the correlation between junk debt and small caps. relatively speaking, it is positive most of the time. You can see it's mostly in positive. Remember, this is a monthly chart, so quite significantly positive correlation. So we will be looking for a bounce for risk assets, stocks and junk debt, and yeah, most likely it's gonna continue higher. We'll see. I mean, it looks very much like a bottom to me right now. Dollar index, very interesting. So it never even made to a strong support at the blue line and just continued higher. And yesterday again it broke out to a new 52-week high. So as you probably know, gold XAU, gold spot, is divided by US dollar. So if as I just showed you, dollar is getting bigger, stronger, heavier, XAU USD, this bottom part of the equation, is getting bigger, stronger, heavier, and it's pulling this currency pair lower. So latest signal was bullish. Right there is the breakout, 12th January. Latest signal actually 31st of December, but strong push to the downside as dollar rallied to new highs. So let's see where this takes us. Looking at 4-hour charts. So again, notice that this is XAU USD. This is continuous instrument. Notice there are no gaps between the candlesticks. We can do GLD. There are the gaps. So for example, here from the 5th of January till 6th of January, there was a huge gap. So these lines now are meaningless. Do not use intraday trading with my indicators. You only use my indicators to trade intraday if it's a continuous instrument. I cannot overstate this fact. So looking at this chart on the 4 hours, here's the initial breakout on the 19th of January. And then, it was definitely overextended. I sent it to my subscribers, and lo and behold, we got a nice pullback. So I was expecting it to stop around here at 1815, but it didn't happen. We continued lower. In fact, on 4-hour chart, we're now in a bear market. However, if we look on larger time frames, like a daily chart, we're still in an uptrend. So I'm wondering if we're going to bottom here and then rally. So this all depends on the dollar. Dollar needs to weaken so gold can gain. But right now it's just not happening. In fact, looking at GDX, here's GDX. This is almost a 52-week low. Low is 28.87, excuse me, but low here is 28.83 on September. So we're so close. We're basically retesting the lows from September here. And notice this downward facing arrows. So this is how we would treat downtrend. So we can see ideas where to short. Right there as well, you would have been shorting it. So you can see the downward facing arrows. In other words, if a security is in a downtrend, we do not want to be buying it. How do we know it's in a downtrend? So in this case, we can see GDX. I trade GDX sort of like a Forex security. So if in case of XAU USD, I use the red and the blue line. In case of S&P500, I use the blue and the yellow line. So I give benefit of a doubt for stocks to the bulls, but for gold and Forex, I don't give anybody benefit of a doubt. So if it closes below the red line, we're in a downtrend. If it closes above the blue line, we're in an uptrend. And as far as GDX is concerned, you can see we're in a downtrend. In fact, we started being in a downtrend in March of last year. So we were continuously shorting it. We would be continuously shorting it. And actually, all of these trades worked out quite well. Now we're basically at the moment of truth. We could continue lower, and then this breakout for gold is going to come into big question. I'm already questioning it. So moving on to Bitcoin. So again, Bitcoin, I had again no problem. I got some criticism for being a bear on Bitcoin, and I'm not. These are actual alerts back in January of 21. An enormous gain in our favor. Actual alerts again here in May of 2020. Buy and buy and buy and buy, and but then something happened, and we're, especially lately, like this is an actual breakdown in January of this year. We played it to the downside. This is an actual alert. You were able to get in on the short side. So again, we're gonna bounce most likely, but I think the trend is to the downside. And Lord knows how low we can go. We can look at monthly charts. Looking at monthly charts of Bitcoin. So we can give the whole thing back easily. We can just get down to like 8,000 very easily. So yeah, all of those Bitcoin millionaires, do be careful and make sure you have profits and diversification. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com, click on products and sign up on the products. I have trading indicators. The indicators I just showed you, this green, blue, red, and yellow line, this is basically all I use. Very convenient for trading. At $30. If you want just a newsletter, so again, for example, I'm going to have all of the stocks I'm going to cover during the newsletters, and I send the actual alerts as the newsletter, as the trades come up, basically. And the ultimate bundle is both the indicators and the newsletter. I think it's a great buy at $59.95 per month. That's it for this week's recap. Again, if you have any questions, let me know. Thanks for watching. Have another great trading week. Bye-bye.